Hi, everybody. Warm welcome to AIB's exclusive event for students and alumni. Today's session is all about making sense of your MBA when it comes to self-education tax deductions, which is especially fitting with tax time just around the corner. I'm Annalise Jackson, AIB's Brand and Communications Manager. And like many of you, I am also a AIB student. And so I know firsthand that navigating what you can and can't claim for study-related expenses can be a bit confusing. So that's what we're exactly here to unpack today. I'm thrilled to be joined by our special guest, Fiona Stapleton, Special Counsel at Thomson Geer and leading expert in Australian tax law. Fiona will be guiding us through the essentials of tax education deductions and what MBA students should be aware of ahead of tax time. So before we dive in, just a quick note, today's session is intended as general guide to income tax deductions in Australia. So it's not intended as personal tax advice. So just keep that in mind when listening. And thank you for everybody who submitted questions when registering. Fiona will get through to these at the end of the session in the Q&A. And if you do have any during the presentation, please feel free to submit them via the questions box. It's just up there in the top right-hand corner with a little question mark. And Fiona will aim to get to these if time permits. Just remember that Fiona won't be able to answer any individual tax advice. But with that said, I think it's a great time to get started. So Fiona, I'll hand it over to you.
Thanks very much, Annalise. I appreciate the very warm introduction. So let me just get started. I'm going to share my screen, so just bear with me. Great. And I think there's a function if you need to zoom in. There's a function somewhere on the right-hand side on your screen. So if you want to zoom in on the slides, you're most welcome to do so. So as Annalise mentioned, today we're going to talk about basically navigating self-education tax deductions in the context of your MBA and your related studies. So a bit of an outline of today's session. First, we'll go back to basics, which I always like to do, and we'll talk about some key tax concepts, which are relevant here, but also broadly applicable to other things you might do in life. Secondly, we'll go through what is a self-education related deduction. We'll touch on some frequently asked questions, and then we'll go through some examples that are actually in a tax ruling published by the tax office on this topic, which are super helpful just for a bit of a comparison. So let's jump right in. Obviously, being a lawyer, I've got to put in my disclaimer, but Annalise touched on this. Today's session is really to provide you with general information only, and it's not intended to constitute any sort of personal, legal, tax, or financial advice. We encourage you always to seek your own personal independent tax advice, particularly as tax is one of those tricky concepts that are always dependent on your personal circumstances. So the best thing to do is seek your own advice to the extent you have any questions or concerns. So let's get back to basics. Taxable income. So taxable income is the income on which tax is levied for every individual in Australia. It's a construct of our tax law. So basically, as a function, it's the sum of your assessable income less your allowable deductions. And all of these concepts are picked up in our tax law. So to the extent you need any guidance, that's probably the primary source of that guidance. It's not rocket science. You basically add up all of your assessable income. So for example, your salary and wages for the year. You add up all of your deductions for the relevant income year, and then you subtract your deductions from your assessable income to result with your taxable income, on which then your tax is levied at your individual marginal tax rates. Today's topic is purely on this deduction component. So we're not touching on assessable income and what constitutes assessable income, but today we'll talk about some deductions. So in our tax law, we've got two types of deductions. We've got what we call the general deduction, which is often referred to your 8.1 general deduction provision. And then we've got some specific deductions, which are those deductions that are expressly included in our tax law outside of that general provision. So self-education deductions fall within that first component. So general deductions are effectively deductions for any loss or outgoing to the extent that it is incurred in gaining or producing your assessable income. So being an individual, we're really in that first paragraph, paragraph A. So the loss or outgoing must be incurred in gaining or producing your assessable income. There's also a negative limb, which we'll come to just on the side. You cannot deduct, so you're denied a deduction to the extent that it is a loss or outgoing of a capital or of a capital nature, or of a private or a domestic nature, or otherwise it's related to producing exempt or non-taxable income, or another provision of our tax law precludes you from deducting it. So basically what this means is that the general deduction provision, this 8.1 provision, is broken up into two key concepts. We've got this positive limb, which gives you the gateway into the deduction. So you can deduct loss or outgoing occurred in gaining or producing your assessable income. But then we've also got this negative limb that then takes you outside of this provision if the loss or outgoing is capital, private, or related to non-taxable income, or if the tax law otherwise prevents you from deducting it. So let's just touch on the positive limb and the key components in this limb. We've effectively got two things that are allowable deductions under this limb. It's a loss or it's an outgoing. An outgoing is another word for a payment, some sort of expenditure, basically an outgoing of yours, so something that you're parting with. And then a loss is meant to encompass things that where there's no payment. So for example, if something is stolen from you or involuntarily required or paid or whatever, the loss is meant to basically address that and capture that into this deduction provision. Then we've got this concept of to the extent that. So this phrase is basically requiring there to be a connection or a nexus between the deduction and the gaining and producing of your assessable income. And so aside from requiring a connection, it also allows you to get a deduction to the extent that it's relevant for gaining or producing your income. So for example, if you've got an outgoing or a loss that is related to your income, but also to private purposes, then you have the ability to what we call apportion. And so the component of that loss or outgoing that's relevant for your income producing purposes, you still get a deduction for that. So it's I think a very flexible provision in the sense that it gives you the ability to apportion between deductible things and non-deductible items, even if it's just the one expense. That last line there, I've put in a little bit of a comment to let you know that the apportionment must be reasonable. So it will highly depend on what we're talking about. But for example, if you're traveling to undertake a course in another city and you don't live in that city, then the travel can be deductible potentially. But if you're tacking on a private holiday at the end of the trip, then all of a sudden you've got not only income producing purposes, but you've also got private purposes. And so to the extent that that phrase basically allows you to apportion between the deductible component and the non-deductible component. The second part of the positive limb is probably the most important, particularly in your context. So the deduction must be, or the loss or outgoing must be incurred in gaining or producing your assessable income. So there's no definition of what this means or what it requires, but as a general concept, basically it needs to be incurred in the course of gaining or producing your income, or have the essential character of being related to an income producing expense. So again, it's like coming down to that concept of is the outgoing or loss connected or relevant or incurred in the course of you gaining and producing your income? So for example, I specialize in tax. So if I do a tax related course that will improve my skill in my current role, I mean, you can see how that is connected to my income producing activities, because income producing activities, salary and wages, and I am undertaking this study or qualification to basically better my skill. And why is that relevant? Because my skill is what is generating my accessible income for tax purposes. So yeah, you know, synonyms for this basically like connection, relevance, incidental, basically, yeah, the loss or outgoing, the occasion of that. So the reason or I guess the fundamental driver of that outgoing or loss should be found in the production of your accessible income. So that last line there is just a contrast note. So I spoke my example about practicing in tax law and having a current role. Well, if, for example, you are unemployed and don't have a current role, or you'd like to change and acquire a new role, then the expenditure or the loss or outgoing couldn't necessarily be incurred in gaining or producing my accessible income, because at that point in time, if I have no job, there is no accessible income. Or if I want to get a new job, which is materially different to my current job, then it's not really incurred in producing my current accessible income. It would be considered, I guess, too far removed or too soon, because the new role is is basically the objective in that example. So we'll come back to this point in a little while. Then we've got this negative limb in this deduction provision. So this negative limb basically pulls out certain expenses. So this one says you can get a deduction under this provision, except to the extent that it is capital, private, or related to gaining or producing exempt income or prohibited by a tax law. Now, the first two are clearly the most relevant to this, to your circumstances. So what is capital? Capital, we like to extinguish capital from revenue. So, and my best analogy that I like to use is capital is basically the infrastructure. So I like to use the example of a tree. So capital would be the tree, and then revenue would be the apples or the fruit that the tree produces. So the capital is basically this enduring benefit, once and for all profit yielding structure. It's the infrastructure. And then the revenue is like your profit, your revenue for the year. It's the fruit that you harvest from the tree. So I hope that analogy lands, but essentially a capital expense might be like an outgoing or your payment for a computer or a desk or a calculator. And the reason why is because those are enduring benefits. They're not something that you would essentially, you're not like trading in computers, for example. It's not trading stock, it's not revenue. And then the private component is basically anything to do with you personally or privately is not deductible. And you can understand why, because it's not relevant to an income producing purpose whatsoever. So for example, generic clothing or your haircuts or parking fees, your rent, they're all private personal expenses that you shouldn't otherwise get a deduction for. Now, obviously, there's always a carve out for these types of things. So for example, if you're paying rent but part of your home is used for income producing purposes, then there's a world where part of that expense can be deductible. But generally speaking, the purpose of letting you know that private expenses generally, the default position is that they're not deductible. And then you can see if there's any exception to that general rule. I'm not really going to touch on the last two because they're not relevant, but an example of exempt income would be like a grant or a scholarship, and then certain deductions that are expressly prohibited by tax law include penalties and non-compulsory uniforms. So they don't come up as often in this space, but just flagging them so that you know that they exist. So let's get into what is a self-education expense. So self-education as a term really just encompasses broadly like any sort of self-development, skill improvement, whether that be a conference, a CPD, a professional qualification, a course or study provided by an institution such as AIB. Basically, anything to do with work or learning or study that is basically self-directed. So you might have seen this in AIB's brochure, but it's a great way to capture some of the key eligibility items. We spoke briefly about this in the deduction provision, but your eligibility will be dictated by your personal circumstances. So if you are in a role that's income producing, so that is just a fancy way of saying, are you employed? Do you derive salary or wages? Yes. Are you looking to upgrade your qualifications to help you in your current employment? If yes, then you may be eligible for the deduction. If you're trying to improve specific skills or knowledge used for your current employment, which was my example earlier, undertaking some tax-related study to improve my skill for my current role, then you would be eligible to claim. The other two basically relate to, are you improving your income producing capacity in your current role or with your current employer? Yes, then you are eligible for the deduction. Where you are unlikely to be eligible is where basically your study does not relate, or your MBA does not relate to your current role. For example, if it's too general, or if your current role has sort of like no MBA business administration flavor, or if you're not employed, or if you're looking to swap roles or completely have a career redirection, then you would say that that's probably too far removed or too soon to be deductible under these provisions. So a lot of you have asked, what can you claim a deduction for? Well, broadly speaking, let's just start with your course or tuition fees. So that is, I guess, the most common deduction that you would get undertaking study. You can also potentially get deductions for related expenses like fees, student services fees, amenity, union fees. You can also get deductions for your textbooks, your stationery, any sort of like calculators, computers, but we'll come back to capital items in a minute. Certain travel and transport costs. So my example before was about traveling to another city, so to a place where you do not live. And so that travel typically can be deductible. And in that scenario, also your meals and your accommodation can be deductible. But, you know, again, I want to come back to the whole, it will highly depend on your personal circumstances. So you have to look at where you live, where you're traveling to, what is the purpose of the travel? Is it solely for the education, or otherwise is there a private component? So there's a little bit of an analysis involved, particularly because the tax office loves to look at these types of deductions. Just broadly, like what you can't claim a deduction for. So I think this was also in the brochure, but you can't claim deductions for government assistance payments. So ab study, youth allowance, basically any payments from the government, they're not deductible. Your self-education expenses for new roles, new positions, new jobs, even if they're with your current employer, the tax office considers it to be too soon to be regarded as being incurred for income producing purposes. So with the current employer, I just wanted to touch on that. So for example, if you're an assistant manager or a junior manager or a senior associate and you're looking to get the next step up, but it is not materially different to your current role. So what that might mean is, you know, if you're in an accounting firm and you go from manager to senior manager, what that might mean is you might have additional responsibilities, but the fundamental role does not change. Well, in that case, self-education is definitely deductible in terms of you're in your current in employment environment, but your role does not materially change, although you're getting a promotion. So in that case, self-education is fine. But where it's essentially not fine is if you're going from accounting into marketing and you're doing an MBA to make that swap, the tax office does not consider that to be requisitely connected to your income producing purposes. Similarly, if you have no job or if you're looking to get a job, the tax office does not consider that to be sufficiently connected to your income producing purposes. And then the private expenses that we touched on, holidays, clothes, haircuts, meals. I also put this in there, self-improvement or stress management courses. So a lot of people are doing like, self-development, self-help courses these days. They are not typically eligible for deductions. So just keep that in mind when you're looking at your own circumstances. And the last note here on the PowerPoint is just to let you know that if there is a dual purpose or there is some deductible component of your expense, then of course you can deduct that component. And I guess you just need to make sure, how you're breaking that up or how you're divvying up that component is reasonable based on the nature of the expense. So we'll go into some frequently asked questions. It's very common for students and individuals to ask us whether they can claim a deduction without an invoice. And the answer is yes, but you have to be very careful. So the tax law requires you to substantiate with written evidence your deductions, particularly if they're over $300. So what that means is basically a fancy way of saying you need written evidence to substantiate why you're deducting something, and that is basically the contents of a tax invoice. So if you've got a tax invoice, that should be sufficient, but if you don't have a tax invoice, you basically need the name of the business or the supplier, the amount of the expense, the nature of the goods or the services studied, or for example, calculators, laptops, whatever, the day the expense was incurred, and the day it's made out. So ideally, you just grab a tax invoice. That's the easiest way to meet this requirement. The way I like to do it personally, a little bit of a tip is I use Gmail and I have subfolders for tax-related items so that at the end of each income year, I can just be like, yep, great, these are all my deductions for the year. Very easy to populate, great storage solution. You can do it in any platform you want. It's just a great way to do it. And for example, if you've got a hard copy receipt, so I'll take a photo, send it to my Gmail, file it away, have it ready to go. Really simple. It makes deductions and tax keeping very, very streamlined. I've taken this because it's a great snapshot. So this is taken from a tax office publication, which is cited at the bottom of the slide. But essentially, it's a bit of a gateway into whether you've substantiated your deduction. So do you have a legible receipt? Yes or no? If yes, then happy days, you've substantiated the deduction. If you don't, then you've just got to go through the waterfall. So do you have a credit card or bank statement? Yes or no? Have you obtained third-party evidence? Yes or no? If the answer is no to everything, then you do not meet your substantiation requirements. What does that mean? That means that you cannot deduct the expense. So the tax law makes it very clear that without written substantiation, you cannot deduct. And then to the extent you do get it one day, there is an opportunity to deduct in the future, but the idea is without the substantiation, there is no deduction. So record keeping does become quite important in this context. When can I claim a deduction? So generally it's the income year in which you either pay the expense or for course fees, for example, the census date. And I've put in the early of the following because I know that some of you are self-funded students, but some of you might use fee help. So for self-funded students, it's typically the day you pay the expense. So if that falls on, let's say 1 June, you've paid your course fees of this calendar year, so 25, then you would be making a deduction in the 25 income year, which ends on 30 June 2025. If you pay your course fees after 30 June 25, you're in the 26th income year. For fee help students, what the relevant date is the census date, and for tax purposes, that's generally the date that you're considered to incur the fee help debt. So that's the relevant date for tax purposes. If the census date falls within this income year, so before 30 June 25, then you're in the 25 income year. If the census date falls beyond that date, then you're into the next income year, 26. Census date is different to enrollment day, so just make sure you are using the right date. And again, the written substantiation is the most important part at the end of the day if you're trying to claim a deduction. Can I claim a deduction if I get reimbursed? Very common question, and the answer is no. So if you have an employer that is subsidizing or reimbursing you for your fees or your expenses, then you cannot claim a deduction. But if there is a partial subsidy or reimbursement, then the good news is you can apportion. So if let's say your employer is offering you $1,000 a year to study, then you can't claim a deduction for that $1,000, but you can claim a deduction for the balance of your expenditure. I also wanted to note that sometimes, family members or parents, they will assist with funding. Basically, the tax law requires you personally to incur the expenditure. So just keep that in mind, that you personally need to actually have the money and pay it. Or for fee help students, like you're the one on the hook for the debt, so you would be incurring it. But for example, if the money's coming directly from someone else into the course fees, then just be careful of what you're doing, because you might not be considered to personally incur the expenditure. So just wanted to note that one. And there's a world where, without getting too complex, there's a world where if you want to take a loan from family members or other people or whatever, and you want to use that money that has been lent to you to incur, then there's a world where you get the deduction for that. Can I claim a deduction if I use fee help? The good news is yes. There is no issue with claiming a deduction for using for course fees, which you use a fee help loan for. So broadly speaking, the way that you can conceptualize it is your course fees are the expenditure that you incur. So you're on the hook for the course fees. You're just using fee help to basically satisfy and fund your course fees. But it's the course fees that are deductible, not the fee help debt. So when you're thinking about it, it's just severing that fee help. You're not claiming a deduction for help, you're claiming a deduction for the course fees. We touched on the census date being the most relevant date. And then if you conceptualize it, we've just spoken about the fee help is basically the funding mechanism, but the deduction is the course fee, then it follows that the deduction is not, there's no deduction for you repaying your fee help or reducing your fee help, because they would be basically loan repayments, quasi-loan repayments. So you can't claim a deduction for reducing your fee help. And then you also can't claim a deduction for any indexation applied to fee help or any other loan. So just keep that in mind. Fee help still can claim a deduction, but no deduction available for reductions of the fee help. So if you've made a mistake or forgotten to claim a deduction or didn't have the substantiation and now you do, you certainly can amend your tax return. So individuals generally have 2 years to submit an amendment, and that time starts from the issue of your assessment. So generally individuals that don't have an accountant, you might lodge your tax return in September, October. Once you lodge your tax return, you'll get a notice of assessment from the tax office. That date of assessment is your 2-year amendment test date. So 2 years after that, you have the ability to amend without question. Some taxpayers, some individuals are eligible for a longer amendment period, particularly if they're beneficiaries of a trust or if they carry on a business in their own right. Generally, I would just bank on having a 2-year, and if you think you have a longer period, then go get some advice on that. But the takeaway from this slide is that you certainly can amend a tax return. There is no issue doing that. Some examples from the tax ruling that was published by the tax office. These can be really helpful. We'll just go through them quickly. So the first one is Barry. Barry is a trainee accountant, but he's also studying part-time at university. The idea here is that because he's actually working in accounting and he's studying commerce accounting, he gets a deduction. And the deduction is basically on the basis that he's income producing at the time, and he's gaining skill to improve his performance in his current position. So that's the takeaway from this example. This example, we've got Kieran. He's a salesman and also an assistant manager. He takes 6 months leave to do an MBA. His workplace, his employer, has agreed that he'll get a promotion once he's finished his MBA. So this is what I was touching on before. The promotion is to manager. He's currently assistant manager. So obviously there'll be some additional responsibilities, additional tasks, but fundamentally his underlying position doesn't really change. And on that basis, his education, his MBA, is tax deductible because it's leading to an increase of income in his current position. And although he's taken 6 months leave, that doesn't really sever the connection between the expense, the course, the MBA, and gaining and producing income. So there's no issue him taking time off to study because he's still employed. So here we've got Jamie. He's a civil engineer. He long story short, does a little bit of project management work. He decides to do an MBA, and the reason for doing an MBA, because he wants to broaden his career opportunities and maybe potentially open up his own firm in future. Here the tax office considers that the MBA is maybe loosely connected to his work, but doesn't have that requisite connection. It's not directly relevant, and for that reason he's not entitled to a deduction for his MBA. But the caveat to this example is an MBA is obviously broken up into subjects, into components. So if you can identify the different components and you're enrolling on a course by course or subject by subject basis, which is commonly the case, then you can cherry pick what subjects might be directly relevant. So for example, if he did a project management subject as part of his MBA, that project management subject would be deductible regardless of whether any other subjects are deductible. So the good news story here is if the MBA is not directly relevant to your current role and may not be generally deductible, still components of your MBA may be deductible. You just got to look at what subjects you're doing and how they relate to your current role. And similarly, if you start an MBA but then you get a job, again, you've got that flexibility in deducting. If it's assuming it's connected to your employment, you can deduct that component while you're employed, but you might not have been eligible to deduct the component while you weren't employed. Course fees deductible. So here we've got Jason. He's a full fee paying place. He uses fee help to fund his course fees. So here we've spoken about it just briefly, but obtaining a fee help loan to satisfy or fund your course fees does not preclude you from getting a deduction. You still can get a deduction. So good news story is that the course fees, the subject fees, the MBA fees, they will be deductible regardless of whether you use fee help. But again, just keep in mind that you can't claim a deduction for any payments to reduce your fee help. Books and supplies. So we've got Ian. Ian purchases 2 textbooks, one for $79 and one for $99, and some stationery supplies for $45 and a calculator for $180. All of these are required for his study. The requisite, it's been just assumed that he's got the requisite connection with his study and his employment, so happy days. So he can also claim a deduction for the textbooks, the stationery supplies, and the calculator, in addition to his course fees. And here we've just put in a little bit of a note here. So generally speaking, for items that are less than $300 each, and they're not part of a set, so for example, textbooks sometimes do come as a set, but if we're talking about a single textbook that's under the cost of $300 or a calculator under the cost of $300, then generally you can get a deduction in the year that you paid or bought those items. And the reason why I'm making a big deal of this is because we talked about capital items before. So generally a capital item would include a calculator or a laptop or a textbook. And a textbook, I guess, is a bit of a counterintuitive one because, you know, you think, oh, textbook, it will be out of date soon. But a textbook provides what they call an enduring benefit. It's more of a capital nature. And so the $300 threshold is the threshold that determines whether you get a deduction in the year that you incurred it, so the year that you bought these items, or whether you've got to go into what we call the depreciating asset pool. So depreciating assets are those capital assets that decline in value over time. And so you will be eligible to get deductions for those capital items based on their decline in value, but the whole amount is not deductible in year one. So let's just quickly recap that. This example tells you that these books and these supplies are deductible in the year you buy them. Happy days, because they're less than $300. If they were more than $300, so for example, if the calculator was $400, then instead you would get a deduction for the decline in value of the calculator each year. And when you're getting into that territory, you're probably going to need to get an accountant or some sort of tax advice to understand what exactly the depreciation amount is each year. Their tax office has a lot of commentary and a lot of guidance on its website, so if you want to do it yourself, you're welcome to. But the underlying principle to take away is if the capital item is less than $300, you can deduct in year one. If it's more than $300, you have to deduct over a number of years, depending on the decline of value of the calculator, laptop, whatever. Here we're just going to quickly go through a redundancy. So Jimmy is employed as assistant manager. He basically applies and is accepted to do an MBA. It is assumed that there's a sufficient connection between the MBA and his current employment. Happy days. He pays the fees to the first 4 subjects and then he's made redundant. He continues with the MBA and pays for the remaining subjects after being made redundant. So we're breaking this up. We're breaking it up into the component of the MBA while he's employed, which will be deductible, and then the component of the MBA that he's undertaking while he's not employed will not be deductible. Now that goes back to the fundamentals we talked about at the front and the beginning of the session, which is you need income producing activities for the deduction. If you don't have any because you don't have a job, then by definition, you're not really incurring the expense in gaining or producing income because you're not producing income. So point of the story is deduction is allowable for the first component while he's employed, but the deduction is not allowable for the component while he's not employed. Now, if he finds a job 2 months later, so he's only got 2 months of unemployment, then again, once he's employed and the connection has been established, he gets a deduction for that component, which is great. So I just wanted to say we've gone through a lot of content, and tax is a very detailed and complex world. So I can appreciate that there might have been an information overload, but the point to take away here is we've got these general deduction provisions, and self-education expenses fall within that general deduction provision. If there's any sort of capital or private component to your expenses, then we've got to look at apportioning those expenses. It follows then, the important thing to look at is what are you studying? How is it connected to your current role if you do have a current role? And then just continually monitoring your eligibility for deductions. And course fees at the end of the day are not the only allowable deductions. You can claim deductions for other expenses related to your study as well. So thankfully, the AIB is very invested in you, and they're very invested in educating you. So there are brochures and blogs and other information available through the AIB, which provides you general information, and it can give you some guidance on what sort of expenses can be claimed as deductions and the connection that's required to your income producing activities. And let me just stop sharing my screen. Sorry. I wanted to get back to Annalise. There we are.
That was
and
great.
She might pick up if there's any questions.
Yes, we've had a number of questions come through, a few that you answered as we went. So if anybody did miss Fiona's answers, we will provide a recording tomorrow. So if I have a look through, one of the,
I might just touch on a few if that's okay,
yeah,
Annalise.
perfect. Yeah, you've got them there. So if you
Yeah,
just run through, great.
yeah. So there's a lot of questions about fee help. So um, just to recap, if you weren't in the session at that point in time, so fee help is the funding mechanism to fund your course fees. That is not the deduction. The deduction is in fact your course fees. So the course fees are the expense that you're incurring, and presumably it's connected to your current employment. So that's the deduction that you get. The fee help is really the funding mechanism. So you don't get a deduction for fee help, but you do get a deduction for the course fees. So basically, the takeaway on that is that the fee help or the funding mechanism doesn't preclude you from getting a deduction. You're still eligible, but you don't get a deduction for fee help, and you don't get a deduction for repayments to reduce your fee help loan or debt. So a quick question on self-employment. So provided you're actually income producing, then the analysis is generally the same. So if you are self-employed but you're income producing, then you're meeting that concept, that component. So that's fine. That doesn't really change the analysis. In that case, you just need to make sure that the study is really connected to your self-employment activities. What else? And attendance at AIB events. So you just need to look at what the event is. So if it's a networking event, then generally speaking that would not be deductible because that's more considered a private expense. But if it's attending, for example, some sort of upskilling event or related to your study, then it's arguably deductible in that case. I think that's basically it.
Yeah, maybe just from what you've said, Fiona, what happens if it is a higher research degree? We just had a question in there. Is it the same sort of logic that's been applied today? So
Yeah,
higher
that's
research
right.
doctorate or something like that?
Yeah, that's right. So the analysis will be the same for no matter what structure the education comes in. You just need to make sure it's got that requisite connection to your income producing activities.
Yeah,
Yeah.
perfect. Okay, I'm just
Great.
going through them again. So I think that is all the questions answered. So thank you so much, everybody, for providing your answers and joining online. Big thank you to Fiona for helping us unpack that. There can certainly be a lot there, but I think that provided quite a good explanation. Someone has actually just dropped in one more question. So maybe just on the fee help again, maybe we can try and tackle that one more time before we log off.
Yeah. Yeah. Sure. The course fees, are the deductible amounts. So for example, if it's $5,000 for one subject, I have no idea, so I'm going in blind here, but let's say it's $5,000 for the one subject. That $5,000 is your expense, that's the deduction, and the fee help is really the mechanism that you're using to fund that. So instead of paying the $5,000 in cash, you're using fee help to satisfy the $5,000. So that's the deduction that you're claiming in your tax return. If you're later on, you're paying money to reduce that $5,000 fee help loan, those payments are not deductible because you've already had the benefit of the deduction when you enrolled in the course. And so, for example, if you've been using fee help but haven't claimed deductions and you are eligible for deductions, well, the good news is you can go back through your tax return and claim those deductions when you enrolled in your course. So for fee help students, that would be the census date. You'd need to look at the census date for each subject, look at when that falls in what income year, and then you get the course fee, you deduct it in that year, assuming you're eligible, and that's your deduction. If you're paying fee help later on to reduce your fee help loan, that there is no deduction for that.
Yeah, so for an example there, if you're studying in term 3, the census date is the 13th of May, I believe. So that was actually when the cost is incurred. So you'd be able to deduct for that.
That's right.
Yeah.
Yeah.
Okay.
So if it's
But
in
then
May, then that's in the 25.
Yeah, and so then any voluntary or involuntary repayments thereafter, you can't deduct because that would be essentially double handling.
Yeah, that's right. Yeah.
Okay. So we go through that again in the blog, and then we will be providing the recording from tomorrow. So please look out for those. The blog's attached in here. But I think, yeah, that's really everything. Thank you so much, Fiona, for your time.
Great.
And thank you, everybody, for your questions. All right. Thanks,
Thanks so
everyone.
much.
Bye.
See you. Bye.